Good morning and welcome to another episode of Money Matters with myself, Randy Mendez-Para of the Mendez Home Team at eXp Realty, accompanied by Sharon Thompson Herman. Should I do the whole hyphen? What should I do there? The whole hyphen?
Yeah, I'm doing the hyphen.
All right.
Easing in. I'm
Me
easing
too.
on in.
With the Herman Home Team. And what mortgage company am I announcing here? Drum roll.
We are Herman Home Team, but we are backed by Celebrity Home Loans right now.
Yay! So we are officially moved over to Celebrity. So congratulations on that move.
Thank you.
Yeah, so I'm excited. It's been a couple weeks that we've been off and, life has been busy and, we've been going kind of different directions and we've actually, seen a little bit of changes happening in the market. So that's what we're going to jump in and talk about today, right?
Yes, absolutely. What is going on in the market?
Right. So what we're going to, and we have some slides. Look at us. Woo! So we're going to be talking about, our home prices slowing down. And, when we're talking about slowing down, what we mean by that is we're obviously talking about like, are we seeing, a little bit of a slowing in these massive price increases that we're seeing? Just are we seeing a little bit of a softening, a reprieve for buyers? And I have to tell you, one thing I will say has remained is kind of the unknowns around the market. It just seems like there's still it's interesting to see because there's just still particular properties that the demand is crazy on. Are you kind of seeing the same thing, Sharon?
Yeah, I mean, obviously, I think our higher priced homes are sitting longer and not getting the crazy offers, where the first time home buyer, that 3 to 5 range, is still in the craziness.
Yeah, we actually had this, we've listed several homes over the last few weeks, and it's been interesting because anything about, I would say over that 450 price range, we have definitely seen a slowing in offers. We're still seeing offers, so that's great news on the seller side. So we're still, we can still see see offers within a matter of days. And most of them, we're still seeing multiple offers. Some of them, to be honest, we've seen one offer, but this last week, we listed a property and it was below that $400,000 mark. And the interest was insane, right? I mean, it was like 80 showings in a matter of 2 days. I literally just wanted to hide my phone. I was I can't even, I want to answer every question I have and I can't even keep up with them. But I will tell you something else that we did see in those offers is we didn't see so much risk. And I know we're going to talk about this and we have a slide on it as well. But we didn't see the buyers going all in as we had been seeing in the past months, right? So we did see over asking offers, which was great, but we didn't necessarily see, massive gap clauses or, we didn't see a lot of that. So it was interesting to see. So this is an article that Sharon, I know that you shared with me and I had read it as well. And I think it's really spot on. It is not time for a full-on celebration. Right. But there definitely is the ability for buyers to breathe a little bit easier, wouldn't you say?
Yeah, I mean, the one thing that we're seeing is there a slowing in the market? Well, like we said, it's not a full-on celebration, but we are seeing price decreases, on these listings. So it's like these sellers got super aggressive and greedy, even despite, and I've talked to multiple agents, when I see the price decrease, they're like, I told them that we couldn't list it that high. So we're seeing like these decreases. We're seeing people get more reasonable. We're seeing, people being more accepting of what the market is like, as opposed to just these free-for-alls that we saw, even just a couple months ago.
Yeah, without a doubt. It's funny that you said that. I had one of my agents on my team call me over yesterday and say, hey, listen, I have not one, but two clients interested in this house, but it's been on 4 days and it's had this reduction. And they're like, what do you think happened? And I was like, I feel like that was, the matter of a seller who probably had a lot of perception based off of, the media and trends and what they're hearing, and not necessarily, the most recent data, who wanted to shoot for the stars and then, probably got 4 days on the market and didn't see the showings that matched that and probably did a really quick course correction, right? And so, we can see that according to the National Association of Realtors, unsold homes has rose. So we are definitely seeing that. And I do want to tap on this, Sharon. We do typically see a historical slowing at this time once school's kind of coming back in session anyhow. And right before the fall, which, talk about premature, I am wearing a pumpkin spice shirt, but I'm ready. I am ready for fall. So we typically start to see that historic decrease anyhow. And I will tell you, last year it just kind of went by the wayside because it was an unprecedented year, right? And so if we're looking year over year, it is a big difference. But if we're absorbing that data on a larger historical base, maybe, 5, 10, 15, 20 years, we do kind of see that slowing. And then I have to tell you, Sharon, I personally feel like I saw a little bit of that slowing before. And I think one of the contributing factors was some of the ability to travel again. And so I think that buyers, another thing I think happened is I think buyers got exhausted, right? I think that buyers just got fatigued. They got buyer fatigue. They wanted to tap out, and then all of a sudden they could leave their homes. So it was like, you know what, I can take a break. I can go on vacation. I can enjoy myself. So I think that we saw a bigger tap out sooner than we normally would. And I think that was kind of, pent up from, the lockdowns and what we had been experiencing during COVID.
I would agree with that. I think that we did see a lot of buyers tap out. We also saw a lot of buyers say, oh, I'm going to wait, because I think with the moratorium being lifted on rent, people thought a lot of foreclosures were coming into the market, which we have isn't happening. So yeah, I think a lot of people tapped out. I think a lot of people also, like you said, not so much buyers, but also sellers. Sellers were, we had a lot of people that wanted to upgrade. Well, I guess they're buyers too, buyers and sellers. And because they said, oh, we need more space because we're stuck at home. And like you said, as things started to lighten up and people got out of their house, people then realized, you know what, maybe I can just stay here and make this work. So we saw that kind of leave the market too, but that also, pulls our listings as well. So.
Yeah, I think you hit on a really good point there. I think that there was, I think a lot of speculation was happening and continues to happen. I mean, that's normal in any market, right? But I think a lot of people were just like, oh, well, I think the flood of foreclosures is going to happen. And I know that we even spoke about it because for a while, it was just kind of unknown, like what was that? But I will tell you that, I recently was reading a study and some statistics, and it was 7.2 million homes that opted to go into forbearance since the start of the pandemic. With that said, 3.4 million, which is 65% of them, are currently paying on time. And 1.3 million, which is 25% of them, have paid off the loan in forbearance through either a refi or a sell. And then the additional 6% are actively working with their banks on resolution. That only leaves 195,000, which is 4% of the homes in the entire country that are at risk for a foreclosure or short sale. And I think that right there really, so if you have that question out there, if you've been thinking the flood of foreclosures is coming, it's not. It's not coming. That's not, that's not the case. Because you got to understand that when, we are not, in a market that these sellers are sitting in a position that they didn't have any equity, they didn't have any options, right? And so, they have a lot of options, and they've obviously capitalized on those options. So that, I think that that's really good news. I think that's great news. I don't think any of us want to see the flood of foreclosures. So I thought those were a little bit of powerful numbers. What do you think, Sharon?
I think that's huge because, like you said, people are expecting these foreclosures. I just read a whole article about the forbearance too, and talking about, as they, next, I think it's this month, they're lifting the forbearance. Like, you can no longer be in forbearance. You have to get this corrected. So once again, people think, is this going to bring in the foreclosures and the correction that a lot of people think are going to happen? And no, you're right. It is not. Those numbers that you just said just speak volumes about what we're actually going to see. And, the article also talked about sellers have more options. So back in the day, people were like, oh, I guess I'll just foreclose. There's no options here. Sellers have the option that if they can't get out of this forbearance, if they can't correct, if the income really just dropped, they could sell it, take their profit and run. So
right.
Seller, it still is, as much as we're talking about the market slowing down, more options for buyers, it is still a seller's market.
It is. But here's something, and, the slide shows it, but this is something I'm actually pretty excited about, which is buyer behavior is becoming less risky, right? And I think that there's, a multitude of reasons why this has happened. But I can tell you from even June, we are no longer seeing buyers willing to say, you know what, I'm all in, right? They're not willing to roll those dice at the same level anymore. I think, again, it's kind of a combination of things. And so, but I think that this is a good one because I will say, my concern wasn't necessarily on a mass on a mass perspective. Mine was the individual buyer that was choosing to go $50,000, $60,000, $70,000, $80,000 above appraised value, and is sitting there, stretching themselves and maybe cashing in their retirement and, just basically going all in on one asset. That was that. I get it. I understand it in the sense that home ownership is a huge a huge part of our lives. But on the other hand, that gave me a little bit of concern. So I have to tell you, a little less risk on the buyer side, I've been enjoying, right? I've really been enjoying. In fact, I've been, it's been interesting. We've had some appraisal issues and some different things, but it's just been really nice to just have buyers to have, in a position that they have a little more option. Wouldn't you agree?
Absolutely. I think it's nice for them to have a little bit more say. I think for us, as on the opposite side, when we're coaching these buyers, I think what's nice is that because they have more say, we're not sitting there. They're like, well, when my mom bought a home or when my brother bought a home last year, and it's like, or 2 years ago, it's like, yeah, back then they were doing repairs. Back then people cared. Nobody cares now. So I think the fact that we're not waiving inspections, we're not doing these crazy gap clauses. I mean, you and I have both seen in the recent months, gap clauses have gone down to something much more reasonable, much more reasonable. And we're seeing the sellers also play ball with that. And we're seeing them, just like right now we're working on a deal that a seller got realistic and wasn't like, nope, I'm just going to relist it. It's like, okay, let's take the gap clause that the client's offering, even though the appraisal came in quite low, and let's move on with our life, because it is getting riskier and riskier for these sellers to try to push the envelope like they were before.
Right. Without a doubt. So definitely, as the slide says, the going for broke approach seems to definitely be declining. And that is giving us a little bit of, I want to, again, it is definitely without a doubt still a seller's market. And I think that that's going to be here for a little bit. I mean, we are seeing a lot of good things. So lumber has come back down a little bit. We're seeing an increase in inventory because obviously there's more comfort level within the consumer. So we're seeing more inventory, we're seeing more options, we're seeing longer days on the market. So we are seeing, some adjusting happen. I think it's going to be well into, spring of 2022 before we might be talking about a balanced market again. I think we're definitely still going to be in a seller's market. But with that said, I think that if you've been on the fence, if you've kind of been, hesitant, I think that this is where buyers should not wait to be prepared. And I don't think that they should wait for the deal. I think that buyers, if you have kind of been like, what, I don't even want to be part of this chaos, this is the time to, kind of realign and get prepared. Because another thing that I think that is going to happen, and, I've read several articles on this, Sharon, and you can speak to it probably much better than I can. But I think that we're also going to see, 2022 bringing us some increases in interest rates. And so I think that, waiting for the deal is not necessarily going to be the buyer's best MO.
Well, like we've talked about probably so many times this past year, is that the lower interest rate does not outweigh a correction in the market. Taking a risk on waiting for a correction in the market, we already know the correction in the market is going to come at the cost of higher interest rates. So when those interest rates come up, even if we did see a correction, which we never saw this whole year, the lower interest rate is still going to be the better payment. So we talked about if people are going to be in it long term, once again, it's client to client. But yes, we are seeing the rates come up. It's kind of been super funky this last 2 months because I was like, oh, rates are coming up. And then all of a sudden this Delta variant came in, even though we kept seeing positive information in the financial world. Like you said, prices of lumber coming down. People are getting back into the workforce. The Delta variant drove those rates right back down, which, I think I've talked to a lot of agents and a lot of loan officers, and July was kind of a slow month for everybody. And then all of a sudden we're slammed again in August. Everybody has just been running crazy in August because we saw those interest rates come down and the refinance applications are back up to a high. So we're seeing a lot more refinances. But yes, interest rates are due to come up. The Fed has said that they are going to taper buying the mortgage-backed securities, which is going to drive rates up. And this week we saw 5 days in a row, rates take a little bit of they came up just a little bit, not much, nothing too crazy, but they did come up for a week straight. And the only thing that will keep rates low is the worst case scenario, which is we see lockdowns and COVID continues to affect us financially. So that's, it's, hey, we can have great interest rates, but it's at the cost of, our sanity, our health.
Right. And I don't even remember the number, but I remember reading the number and I want to say it was double digits. I want to say 18%, but again, I don't recall, but I remember reading that, that was how much mortgage applications were down on a national level in July. Mm-hmm. And so, And so I think it's really telling. I mean, obviously what we want to do here is we always want to empower you with information so that you're making the best decisions for yourself, for your family, not only for the short term, but for the long term. And we really believe that the best course of action for buyers right now is not to wait on the sidelines, but rather to get your finances in order. And I mean, you know, not to sound like a broken record, I just have to say that I feel like we so often are repeating the same thing. It's so instrumental that you lean into professionals, you get that aerial view of what your goals are, where are you going, what are the objectives, and you get a plan in place to get there. You know, I have a call after this. And I loved it because it came with like a dump truck of information, but it was like, I'm thinking about this idea and maybe this idea. And if this idea doesn't work, maybe this idea. And I just loved it because they know where they're going. And so they're already ready to explore every route that would get them there. And that's ultimately what we want, you know, and we want to also help you to understand what is truly happening. So yes, there's some reprieve. The inventory is up, not astronomically, not to the point that we're seeing, you know, it go from a seller's market to a buyer's market or even a stable market, but enough that there are few options. You definitely do not have to come in with, you know, all the risk out as that you had to even 8 weeks ago. Even 8 weeks ago, as Sharon alluded to a little bit ago, we have one client who essentially did come in basically putting everything they had into it. And then, you know, we had an appraisal disruption that basically took it completely out of their ability to even have this home. Like, I mean, it was, you know, but because of what we've seen in the market, we were able, the seller would graciously also, you know, kind of looked at things and said, you know, it makes sense. And let me kind of keep this deal together. And now it's come back down and they're not going to lose the property, which is amazing. And so the point being is, you know, we're getting offers accepted with, you know, full price offers. We're getting offers accepted without $5, $10, $15, $20,000 gap clauses. We're getting offers accepted without waiving all of your contingencies. And so it is a really good time still to, you know, get into homeownership and to get your ducks in a row, right?
Absolutely. I mean, I'm still talking to multiple clients every single day, and they're like, oh, my credit's not that good. And I'm like, well, let's look at it. What's not that good? What don't you like? And so it's looking at your credit. What corrections can we make today? What corrections are maybe going to take 6 months? What do we need for a down payment? And like you said, we're not seeing buyers go, you know, they're not going all in. They're not going for broke now. So we are seeing buyers that 6 months ago, when they said, I've got 15, 20 grand down, we're like, ooh, you know, I don't know what we can do with that. We're getting those people finally into homes because the market isn't as crazy, but it's, you know, it's making sure, like, what do you need exactly? What can we do to prepare you? And, you know, not too far off from now is once again as you know, 2020 taxes are going to be due. So people that are self-employed, you know, let's figure out. I have a lot of them.
Yeah.
Let's figure out, what did you know, what does that look like to be able to buy a home in 2022? What can we make sure that you're doing for income write-offs, things like that, to where we can prepare you for January? I've had, you know, not a ton of conversations, but a couple conversations with people that, like, hey, January is going to be here before we know it, and we can get you where you need to be. Let's just look at what you need and that sort of thing. So it's getting your ducks in a row now, looking at your credit, working at paying off debts.
One, it's important to understand too. I mean, you need to look at things on a historical basis, right? Right now, to look at anything year over year, it's going to be crazy because you have an unprecedented year that we're coming off of. And so, I mean, there's a lot of things that you want to look at. So when people talk to me, you know, about interest rates and their credit, you know, remember this: the stronger the credit, the better the rate. But that doesn't necessarily mean that it doesn't make sense to take strategic risk and maybe take that strategic higher interest rate to get your foot in the door, right? And so I know that everybody's heard, you know, so-and-so got 2.5%, or they got, you know, 2.8%. And so it's funny to me because I had a client recently that was looking at like 3.8 or something, or 3.9. And they were just like, yeah, I think I'm just going to tap out. The rates are so high. And I was like, I need you to look at historic data, please. I cannot have you looking at a year that was a pandemic year where the feds were trying to, you know, basically life shock the market, and we had these crazy rates. I need you to look at this on a grand scale. And I also need you to understand what this means to you, right? I need you to understand the translation and the payment, and the fact that rents, which we can do a whole nother topic and a whole nother show on the rising rent market. but that you can still purchase a house for less than you can rent a house, and it gets your foot in the door, and you're 9 times out of 10 not going to be able to outsave that equity. So even though I do believe that we're probably going to see, you know, our home values, you know, slow down to maybe single digit increases in appreciation, you know, here in the future, I think we're going to see that. We're going to see the slowing, and that's okay, right? I mean, we don't want to live in a place where, you know, you see a 30%, 40% increase in a year. We don't want to live there, right? And so I get excited, but just have the conversations. It's so important to have those conversations, and just know, we say this all the time, lean into your professionals, your trusted advisors, you know, really get that full aerial photo of what's going on. And if you don't have somebody, as always, Sharon, right? As always, we would love to be those resources. We aren't a package. You don't have to use us both. So if you got a great agent, still call Sharon. But
we prefer to be a package.
Well, we do make a pretty good dynamic duo. And
no,
so,
absolutely. You know, lean into your professionals, reach out. We are not totally a package deal, but
but it is kind of a good combination, right?
Hey, and the last thing, you know, I'll leave with this is that for these buyers out there that got off the fence, or that got frustrated, you know, I think that the deal that we've kind of been throwing around, that's such a success story for us. A couple that's been looking since last January is when I took their initial application, and they kept saying, I think we're just going to go rent. And we're like, don't do it. We're going to find it. You've got to stay strong. They're living with family with 3 kids. They were miserable, and they kept trying to rent. And we kept saying, don't, please stick with us. And now they're going to close next week. And they're coming in with 3% down and just a couple grand to cover that gap clause. And we did it. I mean, it hasn't closed yet, but it will. It's closing next week. But I mean, I'm just saying, like, those people that tapped out, like, come back to us, please.
Yes. I agree. And just, you know, come back and have conversations. I recently saw one who I love, and I know they have a killer rate on their rent. They happen to have, you know, a great deal on their rent. But I saw their new car, and I was like, yay, on one hand. And on the other hand, I was like, don't just give up yet. Like, we can totally, you know what I mean? So again, real estate is, without a doubt, it is that segue to building generational wealth. It is the segue to, you know, building retirement. I mean, I think it's, again, I don't remember the exact number, but I think it's like 68% of Americans that their retirement comes from their home, right? That their retirement funds come from their home. So this is definitely something that we are passionate about and that we believe in. We believe in the American dream. We believe in home ownership, and we are always honored to get to help you in the process. So tap into us, you know, use us as a resource, lean in. There's no expectations. We want to be here to help you and empower you to make the best decisions. And on that note, happy Friday the 13th, everyone. Oh my goodness. Sharon, are you, what is the word about, like, superstitious? Are you superstitious?
I'd say a little bit. Yes.
Are you like if a black cat crosses your path, do you go a different direction? That kind of superstition?
Yeah, like I don't walk under ladders. I don't break mirrors. Yeah. The little things.
My mom the other day was on my granddaughter, and she was like, you cannot have the umbrella open in the house. You're going to have 7 years, like 7 years of bad luck. I'm like, Mom, the kid has no idea what you're talking about. And Jordy's like, she just really likes her umbrella. And so, like, we laugh, but it's interesting to see in generations how it's kind of different, you know, because it's like embedded in my mom that you don't open umbrellas in the house. Like, you just don't do that. And then my daughter's like, yeah, we'll be fine. Like, we're going to make it through the umbrella situation. So. So anyways, on that note, I hope everybody has a wonderful, blessed Friday the 13th. Stay safe. I did see a little bit of blue skies out there today and clouds. So hopefully we won't be under smoke the whole weekend and you guys can enjoy yourselves. Bye, Sharon.
Happy Friday.
Bye, guys.